Hello traders, the title of the video is Elliott with Trader, Deciphers, a natural gas, messy price structure. Okay. I'm on a monthly chart. It's a very messy chart. What can we see here? What is happening here is jumping all over the place. You see here, alright. Do we have enough data? So there are few questions. You see a chart like this, you have to ask the first question. Have we got all the data? Is that all? Or if not, it's a speculation. We can only work with what we got. Second question, okay, what have we got here? Well, it's a messy chart. Okay, price going up, down, up, down, up, down, and again in this session, blah blah blah. So when it's so messy, when the price structure is so messy, what can help you, okay, is something that is true. Market patterns. With the price is consolidating, the natural gas is consolidating. As we speak now, talking about the medium term, between the level of 209 and the level of 441. 209 and 441. This is what's happening now. It's consolidating, which means people are selling at the top, so they are selling near the level of 441. They are doing it, okay, again, see this month, at the same level, they did here, they did here, they did there. Alright, and if it's coming down from 441 down, the midpoint target is at a 312. If you break below that level and find a resistance, they push it to the ultimate target, which is the lower part of the consolidation at a 209. So it's a consolidation play. But as the price is consolidating, there is always, alright, an imbalance developing. So a trending phase is an imbalanced market. Right? A balanced market is a consolidation in the shape of horizontal consolidation or a triangle. That's what we call a balanced market, or in theory, equal force between the bullish and the bearish trader, but not in practical fashion. But as we see, a balanced market developing has been in place for some time, since 2009. Natural gas is just bouncing up and down between those two key levels. Can you see that? So those who are trading this, if they know that it's a message chart and they work with what we call the market stable data, they will know that is you have to put aside your Elliott wave knowledge and just concentrate on the market pattern, because it's a message chart. So if one day somebody represents you with a chart that is really, really, really messy, he said to you, all right, you say you are the Elliott wave guru, tell me the Elliott wave structure here. Just tell them that when it's too messy like this, we work with market pattern. There are three market patterns: the rising channel, the declining channel, and the horizontal channel. In this case, we have only horizontal channel. So in the medium term, as I told you already, between 209 and 441, midpoint 312. All right. So you can trade it. You know how to trade consolidation. You can do that. Okay. There was another consolidation that was in place before. It's a bigger one, between the level of 441 and the level of 1055. So if the bullish trader push it above the first consolidation zone, above 441, and they find support, the next play will be between 1055 and 441. So they will be, if you find support above 441, all right, they will be pushing it, okay, to the midpoint target, which is at a 740. That will be the midpoint target for the new bigger consolidation. And if you find support above that, they will push it to the ultimate greedy target at a 1055. This is a consolidation play for now, all right? Because it's a messy chart. What I want traders to do is to place on their chart a pitchfork tool connecting this point. Follow me carefully. This point here, and this point here, and place that pitchfork tool on the chart. You can see that was the direction where the price was going. In fact, that's the path that the price is supposed to take going down more. but the price has escaped that bearish pressure. It came out of that declining pitchfork tool. So that's what I'm saying to you. When a balanced market is still being formed since 2009, within that there is a you see that the balanced market quickly, slowly but gradually will revert to an imbalanced market. An imbalanced market is a trending market. All right. So slowly, right now, we start seeing that as they push it here, those who are buying, they push it here, they couldn't reach the top of the consolidation before they sold it. All right, you see that? As they start pushing it down again, they didn't bring it back to the lower part of the consolidation. It looks to me there is an imbalanced market developing. So you need to watch it carefully. Now the price breaks above the median line. You can see the blue line at 312 is pushing back to that level. That's a break above and retest. If that monthly candlestick bar is closed at the end of December 2018, in January, I do not recommend to trade it to splash trade all over the place in January to the 15th of February. Oh, that's not the best now. But if you want to go gently, you want to investigate whether you find support after breaking below and retesting that 312. All right. Another trend line that you can place on your chart connects this point. Follow me carefully, this point and this point. That will allow you to draw the orange trend line. That pullback may break below that 312. So if that is the case, be aware of the orange trend line. If the orange trend line fails to support it, remember the 209. If it goes below the 209, all right, we go back to that pitchfork tool. That's why I want you to leave that pitchfork tool on your chart. All right, probably from January to February, it may be pushing it down, and then you come back all the way to the edge of the pitchfork tool before you round up. Or you can just start running here, up. So it's a consolidation play. A trader did ask me yesterday, Joe, would you like to analyze natural gas? I say yes, I will look at it. If I have data, I will do so. All right. The poor challenge is the data. All right. So I have a data, I look at it. Oh, what a messy chart. And I say, all right. If it's a messy chart, I know how to handle it. I'll work with market stable data. The consolidation is in play. In this case, people are sharing between the 441 and their midpoint target at 312 and their ultimate bearish target at 209. If they buy near 209 and the price is going down, see here, their first target is the midpoint target at 312. And they found a support. See here, breakable retest. But it did not find a support. They stop. They stop. Can you see that? Breakable retest. So he couldn't reach it. Finally, after hanging around here for a while, they push it to the target. So this move from the lower part, a little bit below 209. It didn't go straight there, but you see, he went in 3 more. 1, 2, 3 to the target. So, all right. So now he's pulling back again. Is he going to go straight down, or is he going to do 1, 2, 3? Or is he going to turn around here? At the end of the day, you are just looking for a reliable trading setup in the shape break below, retest, that candlestick bar is closed, implement a different time frame trading method to trade it. If you are trading natural gas, you want to do a little bit of a fundamental analysis, the news, talking about the commodity market. Now on Twitter and Facebook, people start talking about the next commodity boom, because the last one was in 2003, and people were thinking now, oh, it has been a long time, 15 years. Now in fact, the commodity boom has ended in 2011. Generally speaking, talking about gold and silver in 2011. So we may argue now until 7 years. All right. In the wilderness, it's time to go to Canada, yes or no? All right. So this is what's going to trade us. They say we must have another commodity trend. Oh, the stock market is about to go down. We prefer to have commodity trend, but you need to go gently, which means attention to the economy news, attention to the rumor, the noise that people are making, but attention to the price. And for natural gas, it's a consolidation play, one step at a time. There won't be any trend as such if there are no fundamental reason why can cause the natural gas to go up. So money should come out of one sector into the commodity market, and so on and so on. Natural gas, you want to look at crude oil. I posted, did I post that video already? Yes, I did. Check out our Elliott wave. So for trader that was asked me to analyze natural gas, I recommend, highly recommend that you check the video that we posted about crude oil. The title of that video was Elliott wave trader begins to analyze crude oil with a big smile in the face. You like that title? Check that video. If you trade natural gas, you want to check crude oil. Very, very important. Check crude oil. Check crude oil. Did I say 100 times? Okay, you get the message now. Okay, very, very important. All right. So those are the things that you need to do. It's just a consolidation play. Not much to say here. So this is about okay, Elliott wave trader, Deciphers, natural gas, messy, a price, a structure. Is it anything else I need to do? Or is anything else we need to talk about? All right. So remember the key level 209, 312, 441. Consolidate. First consolidation. All right. Okay, again 441, 740, and 1055. Understand that between two key levels, all right, so you see, between the 441 and the 740, there's another median line. I don't want to draw those one. I just remember that. Like now, if I put it here, why do you need to do that? That's a very good question. Did you ask that question? You see, I can read your mind. Even though you are watching it far away, I can read your mind. So the reason why you need to pay attention to the median line between two key levels is because when traders know that there's one key level here, like we say here, there's a 209, and there's another key level here. They are aware of those two key levels, but they always divide it into two. They say, price will go from one key level to the next key level. But before he reaches the next key level, he always acknowledges the median line. That's what they are doing. So you see now between the 441 and the 740, there is a median line which is in a zone of 587, roughly. All right? And also between the 740 and that 1055, there is again another median line somewhere roughly in the zone of 892. So anytime you draw two horizontal key levels, all right, understand that the median line between any two key levels is also important key level. The same thing is true. Am I talking too much? Or I remove online. I know how to bring it back. Yes, I've done it now. The same thing is true about. Oh, I've done it again. All right, I'll get used to this soon. Okay. The same thing is true when we are talking about a trend line. You draw two trend lines anytime you draw. Will you promise me that you'll remember that? Otherwise, it's pointless for me to say it. You have to promise me first before I say it. Have you done that? Okay. Wow. 1055. Now, where this is coming from now? Okay, probably. Okay. I'm trying to draw a trend line, okay? So anytime you see also two trend lines, so we talk about the horizontal key level, isn't it? Now I'm drawing trend line on which I see here, connecting this point and this one here, okay? That's one trend line, yes or no? Okay, suppose I draw another trend line from the same point, and this time I connect it to this one like this, okay? Okay, so from the same point I draw two trend line, one connected to this point, another one connected. So anytime you see two trend line, what do you need to do? Remember also to draw the median line. If you start doing those things, you see that you start making excellent decisions like a pro. You see the median line, how the price came to retest the median line, between the first two trend lines. Nothing should stop you to pay attention to the median line between two horizontal key levels or between two trend lines. The trading algorithm, the trading software are able to identify those media lines, and you as a human being that has created those algorithms, when you are trading, you should be able to do the same thing. So promise me, all right, that you will do the same thing in the future. Because sometimes I remember myself, I said it 100 times. Traders that have been following me for years say, yes, I know that story, Joel. You say that you knew about a trend line, but you don't draw it, isn't it? Yes, that's correct. I'm saying again. All right, so you may know about something, but sometimes traders do not use what they know. I don't know why. Don't ask me why, but it's happening all the time. All right. So you get it now. So this is about okay. So what I want to show you one more thing, one more trend line that can be useful to you. That's why I'm waiting for here. Okay, now we can draw. You see this one here. This from the same point I can draw another trend line like this. Yes or no? Are you with me? So from this point we connect it to this point, and from the same point we connect to this one. And look, we can now draw the median line of that two trend lines somewhere there. Can you see that? You see how the price came, turn around near that median line of that of those two trend lines. And again, you see this is a trend line, yes or no? This is another trend line. What is stopping you to draw again the median line between those two? You see? You can keep doing that, especially if you are day trading. You can come for instance on the monthly chart, draw all these trend line, all these horizontal key level and their median line, and then switch to your favorite lower time frame, like an hourly time frame, and then you can see, look for trading setup in the vicinity of one of those key levels. Look at this orange line, how the price on the hourly time frame was touching it here. You say, well, they are selling around the trend line. Look at that. They are selling. This is an hourly time frame. But you are making your decision around those key level, those median line, and that you have drawn on your monthly chart, and you know that, all right, there's a distribution taking place here. So they push it from the hourly time frame into that zone when they start unloading it. You see it coming, and on your hourly time frame, you can see that they are selling because of that trend line now, a bearish trend line. You see that triangle. You see now? You see, yes. You see? So that's the top of the first consolidation. You remember? Between 209 and 440, yes or no? That's the first consolidation. So on the hourly time frame, now we see that the price is in the top of the consolidation, and now we have a triangle. And then we say, all right, this is exactly what George said. A triangle means anything is possible. If it goes below it, means sell. So it's at top of the consolidation. A triangle was helping us on the hourly time frame. Here it is coming out. Ooh, you missed that. Now it's trying to retest it. Where are you? Sell it down. So this will conclude our discussion today about Elliott wave trader, Decipher, natural gas, Messi, structure. Did you see any Elliott wave pattern on the natural gas chart? If you did, let us know so we can all bash you. So it's all correction, right? Just going up and all. Did you see flat correction? Did you see A, B, C, D, E? Amazing. Did you see any Elliott wave pattern? So now, did you see any impulse wave? Let us know, please. But if you go for instance on the hourly time frame, you may see that this move up, maybe a trending first, and then this one down, cancel it, and then it went up again, cancel it. All these cancellations telling us it's a balanced market, equal force. It goes up, they cancel it. It goes down, they cancel it. All right? So it's a balanced market. It's not imbalanced market. It's not impulse wave. All right? You have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. If this video has been totally useful to you, please let us know by giving us the thumbs up. If you dislike it, mark it down. That's very important for us to know whether you like it or dislike it. If you think that it's an essential tutorial that can help other natural gauge technical traders, feel free to share with your friend on Google+, on Twitter, Facebook, and Tumblr. Okay, we really appreciate it when traders share our video. Alright, it means a lot to us. Alright, if you have not yet subscribed to our channel, this is the moment. It is free. Subscribe to our channel today. Our channel is 24 Elliott Wave, digit 2, digit 4 Elliott Waves in plural. Subscribe today and be sure to click on the notification bell so anytime we are about to live stream a pre-recorded video, you will be the first person to be notified. You will be notified 2 hours before the live stream starts, and also 30 minutes as I'm getting ready to watch it together with you if I am free. Alright, so you can ask me questions directly on YouTube. Alright, sometimes I post video first on Facebook, sometimes first on YouTube. Our Facebook page is stochastic-marketing. Okay, follow us on Facebook and also on YouTube. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott Wave trader, Deciphers, natural gas, a messy price structure. Was it truly messy, or am I exaggerating? Am I being carried away with this simple chart, talking about messy chart? Have you ever seen a messy chart before? Please let us know what you think in the comment section. Thank you for watching, and I will speak to you very soon. Happy trading to you all.